Private health insurance premiums are set to increase by at least 4% come April 1. So now is a time to revisit Medicare Levy and Medicare Levy Surcharge. So I'm going to have a new series on both of these to explain how it works, because it's one of the most confusing parts of our tax system. And if you make a mistake on it and it's in the ATO's favour, they won't change it. But if you owe the ATO, they will definitely change it. So it's up to you to ensure you understand how this works. So Medicare Levy Surcharge is separate to Medicare Levy. Medicare Levy is taxed at 2% of your total income, and if you are an employee or get any wages, it will be withheld as part of your PAYG withholding. Medicare Levy Surcharge is not withheld. So if you exceed the income threshold for Medicare Levy Surcharge and don't have basic hospital cover, you will end up with a tax debt. Now let's discuss how this actually works. You need to understand, having basic hospital cover is the only way to avoid Medicare Levy Surcharge, but this is totally your choice. If you choose not to have basic hospital cover, because for some people it's just not worth it, especially because your whole household needs to be covered, you just pay the surcharge. That's absolutely your choice, but you need to be able to make an informed decision. So today I just want to discuss the thresholds and how that works. So firstly, the thresholds for the 2026 financial year are as follows, and they do get reviewed annually. They don't always change, but we will know by about May what the threshold will be for 2027, and I'll have a video on that when it's announced. So if you are single with no dependent children, the threshold for 2026 is $101,000. If your income exceeds that, you will be charged Medicare Levy Surcharge if you don't have basic hospital cover. But single with no dependents, what does this mean? So this means you are not in a relationship, not living with someone, and you do not have children that are financially dependent on you. But the age of that child is important, because normally you would be thinking 18. That's not the case. So a financially dependent child can go up to the age of 21. It's 24 if they're studying full time. Now these children do not need to be living with you. So as long as they are financially dependent on you, which means that you must be paying child support, you are still part of a family. So it's single with no dependent children is $101,000. For everybody else, it is $202,000 for that household income. Remember, these children do not need to be living with you, but they must be financially dependent. Now, as with everything on our tax returns, it is self-assessment. If you make a mistake on this on your tax return and shouldn't have been charged Medicare Levy Surcharge, the ATO won't adjust it. But if you made a mistake and that you should have been charged it, they will definitely change it. So hit the follow button for more on Medicare Levy.